In this video, guys, we are going to look at the common gap versus the breakaway gap. What's the difference and how do we trade them? Stay tuned. Hey traders, a very warm welcome to you. Thank you for joining me. So gaps are when price opens above. In fact, you've got two different types of gaps here. Let's just be clear on this. If you imagine that this was a bar from day one, day two, if you've got a gap that gaps, let's imagine this was here. If it opens here and does this, okay, then the open is higher than the close. That is a gap, and that's still classed as a gap. But if you're looking at a true gap, it would be if the open is above the prior day's high. That is the, just about on this example, but that would be a kind of true gap, if you like, a real range gap rather than just a gap that opens up a little bit higher than the close. Because at the end of the day, guys, unless the open is exactly on the close, we're talking about stocks here, you're always going to have a gap every single day. So let's think of a gap as a range gap. In other words, it gaps above, the open is above the prior high or below the prior low, or if we're talking about that one, it would be down here. Okay, so there's our gaps that we're talking about. So we've got two types of gaps. And what causes gaps anyway? Gaps are just caused by literally overnight news, overnight sentiment changing, buyers and sellers not agreeing on price, all sorts of things. A reprice in a small sense of the word of the asset at the opening price. So let's have a look at common versus breakaway. So if we imagine we're in a range or in a consolidation, not much is happening, very often we're going to get these gaps. And this is what we'll have here. So we're gapping up, we're gapping down, we're gapping down. These are common gaps. In other words, there's not going to be much volume associated with these. When you end up putting a volume indicator on it, you're going to see that there's not much interest. It's just something and nothing. Maybe it's the market's doing this and that, but it's not that meaningful. We're in a range. There's no real extra participation. There's no reason to get all excited about it. And these are common, exactly why it's called common, guys, because you see them very, very regularly. And if you look at any regular stock chart, you're going to see gaps all over the place within ranges, and they're just not to be get excited about. Now, is there a day trading opportunity from it? Potentially, but what we really like to see are things like these breakaway gaps. So what a breakaway gap is a different scenario. So imagine that this was a kind of ascending wedge, if you like, or pushing up against resistance. A breakaway gap is when we technically break a structure and we get a gap at the same time. So in this instance here, we've broken out of this wedge, we've broken above the resistance level, and we've done it with a gap. So in other words, not only have we got a big tick in the box for bullish sentiment, pushing it through the resistance, pushing it above the wedge, but we've also got another big tick in the bullish box saying, hey, we've actually gapped up. So we've not even traded at any price between the high of this and the open the next day. We've literally gapped up. And what you really want to see, if we kind of go ahead of ourselves a little bit, is a big, nice, solid bar, wham, closing up highs on the next day after you get the gap. And we also want to see big volume. Most of the time, guys, you are going to see big volume. And now, listen, you're not always going to get a breakaway. If you see a breakaway gap, is it always just going to rip off and it's free money? No, of course not. But what it does mean is it sets up beautifully. Very rarely will a breakaway gap break away and then just sit there and do nothing. One or two things tends to happen. When you get the volume, you'll get the breakaway, you get the continuation that rips up, some sort of momentum comes in, technically you get the breakout. Normally you've got a catalyst or a reason for it. Then you're looking for kind of buy your pullbacks or your flags or whatever type trade. Or you get a fake out scenario where it might gap up, rip up, and the next day does a full reversal, starts to come back lower, and then it ends up taking out lows down here at some point. So, and that's for you to decide and you to look at the structure and to go into the price action details and that. I don't want to do that in this video so much. I know kind of some of the intricate things about that. But the point is very, very different. The key to remember the difference between the two is to look and see if a technical structure has been broken as well. If a technical structure has been broken as well, like this example here, it's a breakaway gap. If it's within a range, if nothing much is happening, if it's not very exciting, and it hasn't broken any technical pattern or created a technical pattern, it's going to be a common gap. Common gaps we want to avoid, not really interested in trading unless you've got a very, very specific day trading strategy from that, which there are some. Again, we don't want to go crazy in this video, but really from a swing trading perspective, you can get sucked into these. I know in this scenario we've kind of moved on, but Very often you get a common gap that goes and then gets filled very quickly afterwards, or it might just drift on. Perhaps there's an edge in using it as an opportunity that always gets filled. I don't know, that's for you to decide. But anyway, the point is, from a swing trading perspective, breakaway gaps tend to be far more exciting from an trade opportunity viewpoint, just because they're just creating a lot of interest. A lot of people are buying it. You know, there's a reason. It's broken a structure. There's a lot of volume coming in. Shorts have been trapped. Longs are chasing it. It's super exciting for us to get involved in. Again, we're not chasing stuff. We're not going to be FOMO into it, but it can create then a filter and say, hey, yes, we've got a breakaway gap. Now we look for our trigger to get into the deal. Take care, guys. I'll see you in the next one. Bye-bye.